G'day, ladies and gentlemen. Craig Cobb here from the Grow Me Co. I'm a trader of 20 years and I'm teaching you what you need to know to make clear, concise decisions to better your life and your returns in the cryptocurrency market. And today we're going to talk about technical analysis versus trading strategy. There's a very big difference between the two. You see, many people will lead you to believe that technical analysis is in fact itself a strategy. There will be some technical analysis items that will show you, well, you get in here and you have your stop loss here and so on and so forth. So to a certain degree, yeah, there is an element of strategy around using some forms of technical analysis. And don't get me wrong, I make my decisions when it comes to trading especially, but also investing with the charts in mind using technical analysis. But what I want to show to you and explain to you throughout not just this video, but the entire series that I'm putting forth here is a couple of things. Number one, you're going to need something that you can repeat. So you need something that you can practice and that you can operate with, i.e. what I use is a checklist for my trading. So I find it very easy to get it right and very difficult to get wrong. You need to have a confluence of events. And the problem that I have with technical analysis is the problem that you probably have with technical analysis. And for the first 4 years of my trading career, I've been doing this full time for 15 years, but as I said, trading for 20. The first 4 years, I was trying everything into the technical analysis world, and it would, at best, I'd break even. I'd have some months where I'd be up doing quite well, and then I'd give it back. And what the problem with technical analysis is that they don't teach you, or many don't teach, that there's actually a confluence that need to come together to give you an actual trading strategy. So technical analysis by itself is not a trading strategy. It's the combination of bringing certain items together to create that trading strategy, and that's where the gold lives. Now, it's very easy to get wrapped up in TA, technical analysis. There's lots of people saying certain things about it. What I call the textbook technical analysis is largely false, used in the way that it is. Now, what I mean by that is that, sure, you can learn about an ascending triangle and understand the logic behind it, and it's relatively straightforward and simple. Well, there's a lot of other things that you want to be layering into that to make sure that it works. And the way I describe technical analysis is this. If you are new to trading, think of it like this. Or if you've been trading for a while but are not getting the results that you want, think of it like this. You're not a chef, okay? For the chefs out there, put the example of something else, all right? But you're not a chef. You get thrown into a busy professional kitchen with literally thousands of ingredients all around you, and you get told that you need to create a souffle. You've never cooked a souffle. You've never baked a souffle. You've never seen the recipe for a souffle. You've got no idea of what to do, what the temperature of the oven needs to be, for how long it needs to be in there, how long does it need to rest, what amount of sugar and flour and all eggs and butter and all these different ingredients. You've got a pantry with 2,000 ingredients in it. What are the probability or the chances of you picking the exact ingredients and then layering them into that process to create the souffle in perfect order? Well, the odds would be something like 10 million to 1 of that actually occurring, potentially even higher. This is what most people do when it comes to technical analysis. They've got so many tools out there. There's no shortage of things that you can use and put onto your charts. And what ends up happening is you end up with a really messy chart and no real clarity. You've got things that are on there that say bull or go long. You've got things that say go short, and it just becomes analysis paralysis. The art of technical analysis is really to know what to use in layering with the strategy and the methodology that you're trading. And that's where my 15 years of experience comes in. And throughout this program, free here on YouTube, you are going to get each of these ingredients, or many of the ingredients that I actually use, and then I'll layer it together so that you know how to apply that into the market. So technical analysis can be completely confusing if you let it. Now, I'm going to teach you what makes sense in the markets, what you need to do, the ingredients for you to go ahead and approach the market in a way that is going to be conducive of consistency, and that's in returns, consistency in your losses. So when you have a loss, you need to know what it is, and most importantly, consistency in the way that you approach the market day in and day out. So follow through on this full series. Think about this like this as well. A lot of people jump into trading calling themselves a trader. They're just a glorified gambler, and they're gambling in markets. I'll make that very, very clear. Every business has a business plan, okay? You need to understand that. If you want to be successful in trading, you need to read this and run this like a business with the same amount of structure and purpose and planning as you would if you were going into any other business. The thing is with trading is it's a very singular activity. You don't have a big team of people, so it's very easy for you to just have it in your head. You know what I mean? You just have it in your head and you'll be fine. And the losses, well, you just don't tell anyone about those. Incorrect. You need to be accountable. You need to know what it is that you're doing, and having a checklist strategy means that your accountability is there and you can measure your success because you've got something to measure it against. And when you can measure it, you can manage it and you can track it and you can improve on it. You've got to have a strategy that you understand. And this is where I come in. We're going to get rid of the confusion. We're going to go to what works. There's a lot of things around this subject. Overbought RSI, you see it all the time on all these social media. MA crosses, the golden cross, oh, the holy grail. It's not at all. It means really nothing, okay? It doesn't. All it means is the price has already moved and those moving averages cross, and there'll be more covered in this program for you to understand that. They look at the bull flags, bear flags, pennants, sloping trend lines. That's the biggest peeve of all. The most subjective thing that you can put onto a chart, if you want to be objective in your approach, the most subjective thing you can do is start putting subjective lines on your chart. And I know it's hard to let go of that. It was the last thing that I had to let go of before my mentor was just about to fire me. He said, if you keep using sloping trend lines, I'm not mentoring you anymore because I know they don't work. And he was right. When I got rid of sloping trend lines and focused on true trend, my trading did change. I took less trades and I did better. And that's something else that we'll cover as well, is that more trades doesn't actually mean more money much of the time. It's quality and over quantity. So these tools are great if you want to be confused and you want to just go to YouTube University and get, slip on a banana peel, so to speak. What you need is factual information, the what is. So nothing subjective. Factual information is in the realms of something like this. Price measured by time. Now, if you want to represent that as a candlestick, and we'll look at those shortly, then that's perfect because it's a real representation of what actually occurred on the order book. It's just simply price measured by time, whether it's a 1 hour candle, a 4 hour candle, a 5 minute candle. It represents something that is. Hey, I know it's the past, but we're going to use this information to collate that together and to give us a sense of understanding of what is as opposed to what might be. When we know what is, we can make risk managed decisions about what the future might hold with an increased probability of a successful outcome. Learning from those with experience is what you're doing here. And you need to focus on what good traders do as opposed to what good traders get. You're not going to be a gold medal swimmer if you don't do the training that a gold medal swimmer does. The same with trading. You're not going to get my results without first learning about what you've got to put in. Trading isn't an easy thing to do, but it's completely available to you. And I have absolute faith that anyone can do this. You just need a bit of grit, and you need a bit of training, and you need to manage your risk most importantly. When I let go of those sloping trend lines, like I said, things change massively for me. Now, the information that matters, again, we'll come back to the simplicity. What can you do in a market? You can buy or you can sell. That is it. You can buy or you can sell. That is it. They are the only two actions. There is a passive step there as well, and the passive is to stay out. You can choose to do nothing, and that is absolutely a position to have, is to be flat. So having no trades on is not a bad thing, okay? But realistically, when it comes to the actual decisions, you can buy or you can sell. So who is in control at the moment in time? With the chart that you are looking at, with the time frame that represents what you're after, what you're looking for. Who's in control, the buyers or the sellers? It's really that important. Am I buying or am I selling? Well, if I'm going to be buying, I want to make sure that I've got the correct information to give me a high probability of knowing that the buying is going to continue, and vice versa for the sellers. Some things that are as simple as, do the sellers or buyers win the candle? Okay, true trend, not trend line. And we're going to cover all of these things within this YouTube series. We're going to use simple indicators based on decision-making process at all. Now, I'll tell you one thing right now. When it comes to trading decisions for me, an indicator, and I only use one, an indicator for me is only going to tell me when not to trade, when to stay away. It lets me know if there's continuation, highly likely, or if it's a more highly probable outcome that we will see the continuation dwindle, i.e. we're getting exhausted within this trend. That is the only thing I use an indicator for. At the end of the day, with the process that we're going to go through here, this plan that we're putting together is going to give you all that you need in terms of, you need an exact entry price, you need an exact stop loss, and you need to know where your targets are set. You've all been in a trade that has run into profit and you didn't take it. No longer will that happen. You'll be taking profits along the way, scaling out as things go in your favor, managing your risk whilst understanding exactly what you're doing, when you're doing it, and why you're doing it. You're going to have a plan. The difference between technical analysis and trading strategy is a plan. Technical analysis are the paintbrushes for which you paint on the canvas. They're important to use, but in what order? That's what we're going to do with this program. Now, guys, there's more chapters to come, of course. Please do subscribe. Give me any feedback in the comments. And down below, you'll find a link there to open up your BloFin account for which you can trade from. Have a great day. We'll move on to the next chapter.